Hey guys, TommyBryson here, and 2022 is here. So what exactly is going to be my investment plan? And you know, guys, if you've been following me for a long time, you know that basically I used to grab all of my extra money and literally dump it all into the stock market. But things have changed a lot. I'm no longer doing that anymore. And it's not because the market is trash, I'm not making any money, it crashed. No. It's just because I just don't want to put all my eggs into that one basket, and I've gotten a little bit smarter about that. And in this video, guys, although it's kind of like an update on my life and my investment strategy, I also wanted to make it like, hey guys, here is the app I use, here's how I use it, here's what I invest my money into, why, how much money you'll actually have in this time. So I kind of wanted to bring you guys along because it's cool to kind of make a video and say, hey, I want to invest this much, so I can have this much, but it's even cooler to tell you exactly how everything works, so that way I can bring the team along with me. So to me, that's even better. And if you're watching this video expecting a bunch of facts and formulas, that's not what you're gonna get here, because that's only 20% of investing, and the other 80% is basically feelings and really just automation and just automated everything. So if you think I'm over here like, I gotta study this, I gotta study that, usually everything is just automated and basically just doing it what it's supposed to be doing to make me money. That is really it, okay? So if you guys are new here, like this video on top about, also subscribe and hit the bell so you're notified. And if you're interested in passive income, if you're interested in investing, the basics and beginner stuff, this is the video you want to watch. So the first things first, guys, okay? I want to start with the why you might want to be investing. And before you click off and say, Tommy, this is going to be boring, the why is so stupid, it really isn't. Because think about it, okay? Whenever you say, I made some money this month, I'm going to grab this money, and instead of me going out there and buying some sneakers, buying a new car, buying whatever I really want to do, or just have fun overall, I'm going to grab this money, save it and invest it, and hopefully I don't die before the time I can actually take the money out. Like, that's a pretty tough thing to actually do every single month. So that's why I was saying, if you don't have a powerful why, you probably will not make it, and that's on my mama, okay? And by the way, you might be wondering, Tommy, well, what's your why? My why is simple, honestly, and it's that I want to have control over my finances, so I have basically freedom of choice, and I don't have to go through the same things I went through as a kid. And I'm also able to help people with my resources to actually make sure they're actually solid and pretty good. I'm talking about like health-wise, okay? So one thing I do, guys, this is right here, is my wallet, not an ad, but I do have it on Amazon, so if you want it, link down below. But my wallet, and on my wallet, right here on the money tab, when I take the money out to spend it, I have this right here. It's a piece of paper that says why. So right there, clear it up, why. And I carry it around with me all the time, so that way, whenever I'm feeling a certain way, or I want to remind myself why I'm doing this and maybe why I don't want to spend money on this and that, I carry this around, and it has basically my why written on it. And no, I don't mind sharing this, so if you want to read it or screenshot it, I have terrible handwriting, but there you go, do what you will with it. But it's basically exactly what I told you before. It's just something very powerful that's deep and meaningful to you, so that way when times get tough, when you want to go on vacation, when you want to buy whatever you want to buy, you kind of say like, hey, I got a goal and I want to make it there. So that's the idea, and that's why is literally so important. So keep it in your wallet, keep it in your purse, keep it where you keep your things, and that way it serves as a reminder every single day. Now, the second part of this video, guys, is basically the how. How are you actually going to do this? And it's basically just 3 parts here. The first thing is you got to give your money a specific job. Meaning, for example, you ever been at a job and they don't tell you basically what you have to do, what's part of your job description? You're like, oh my gosh, like, should I have done that? Should I have not done that? Like, is this extra? Should I be getting paid for this? Same thing here applies to money. Money needs to have a job, or else you kind of just spend it on whatever it is. So give your money a job. In this sense, you want to make your money's job to multiply and to grow and make you more money. Really that simple. Second thing is, you have to decide on a percentage of how much money you're going to allocate when it comes to investing and making you more money. Now, the common rule I follow is anywhere from 10 to no more than 20%. The only way I would do more than 20% is basically if I already have a paid off home. And by the way, just so you know, okay, I don't recommend investing if you have any debt, if you don't have an emergency fund, because those things are very important to actually do first. But again, just 10 to 20% should be your allocation. If you want to do more, make sure you have a paid off home because that helps a lot. But most of us don't have that. And that's fine. So 10-20% is going to be just fine. And the third part is basically you have to give yourself some short-term goals, some mid-term goals, and also some long-term goals. So me personally, because again, I love giving examples. It's the way I learn, and I hope you learn this way too. So for me personally, my goal for money is to multiply and put it in the best place possible to earn me more money. And this means that sometimes when you put your money in a place where you're thinking to make more money, you might not. And instead of waiting, you might just want to take it out and start over somewhere else, okay? The Bible says that, okay? If you have a tree and you grew it and it gives you no fruits for a long time, just cut it down and start a new tree. Sometimes it's just not worth it. You want to make a solid return on your money. Anywhere from 8 to 12% is going to be pretty solid. Don't worry, I'll tell you what I invest into also. And for me personally, I invest 20% of my monthly income on a weekly basis. So for example, if I were to make, hey, Tommy, how much do you make per month? Okay, let's just say, for example, if I make $4,000 a month and I want to do 20%, multiply by 0.2, 20% is $800. I divide that number by 4 and I say, hey, every single week I'm going to invest $200. And I like to do it on Mondays for no specific reasons. But every Monday, I put that money in there. And by the way, this is also called dollar average. If you do this every single week or every single month, you buy into the market when it's high and low, so you get the average every single year, so you don't have to worry about, hey, the market's up or the market's down. Doesn't matter because you're buying either way. And the last part is basically when it comes to my short-term goals, mid-term goals, and long-term goals, that basically, again, these are my goals according to my income, but you can make these goals according to your income. So if you find out, hey, Tommy, I'm able to invest $100 a month. That's 10% of my income or whatever it is. You say, okay, by the end of the year, I want to have $1,200 in there. That's the cool thing. So for me personally, by the end of this year, I want to have around $385,000. In 5 years, I want to have, for example, $734,000. And in 10 years, I want to have around $1.4 million actually invested. Again, these numbers seem large, and they are, I understand that, but it's all according to your income. So if you have, again, if you make $1,000 a month or $2,000, multiply according to your income, and then that's how you basically figure out. Now, you might be wondering, Tommy, how do you get those numbers, okay? Like, how do you figure that out? Well, I'll tell you. If you go on Google and you type in compound interest calculator, also monkey in there, you get this calculator right here, and I kind of say, hey, how much do you have in your investment right now? If the answer is, hey, I don't have any money whatsoever, put 0 in there. How much are you going to be investing, okay? If you're going to be investing, let's say, hey, I'm going to invest $500 every single month. Well, you put in there 500 multiplied by 12, which is $6,000. Because again, this is the annual addition. And let's say for 1 year at 12%, you want to have, for example, $6,700. Not bad. In 5 years, hey, I want to have in there, Tommy, $42,000, okay? It adds up, you see? And then in 10 years, hey, Tommy, I want to go ahead and have $117,000. And you want to go even further, in 20 years, Tommy, I want to have $484,000. And in 30 years, Tommy, I want to have, for example, $1.6 million, okay? The good thing, guys, about these formulas and everything I'm telling you is, you know, use yourself as a comparison. Don't compare yourself to me or anyone else out there, because that's a great way to kind of like become anxious and get depressed, honestly. Because if I say I want to have 1.4 million, which is a lot of money, honestly, but then I say, hey, but compared to Warren Buffett's 100 billion, that sucks, that's stupid, the answer is I'm not really gonna be happy, okay? So use yourself as a gauge, okay? And again, anywhere from 8 to 12% is going to be good. And the portfolio I'm gonna give you makes around 8 to 12%. In reality, it's more like 12% with the dividends and everything else, okay? So great portfolio if you ask me. And obviously, guys, when you're taking a look at these numbers, understand that basically these are just estimates, okay? The market might crash, but that's why we call it averages. So when the market crashes, don't stop, keep investing. You might have a higher income, invest a little bit more. You might have a lower income, just adjust it, okay? Don't lose your mind over this stuff. It's fairly simple, and just continue and continue. This is the game. Like, the best and fastest way to get there is step by step. It's a great quote by a turtle somewhere that I love, so that's why I'm sharing it with you. The fastest way to arrive is step by step. That quote changed my life forever. So now guys, part 3 of this video is really like the what, okay? So what are we gonna be investing into? What app are we gonna use? How do we do it? How do we automate everything? And how do we make sure that you actually diversify so that way, if one part of the market crashes, you're not gonna be left naked on the streets, okay? Meaning, guys, okay, my portfolio, just to clarify here, is very boring. So it means that you're gonna be very well diversified. You're gonna make 8 to 12% a year, and on top of that, you're invested not just in the US, but outside of the US and in different sectors. So if one thing fails, you're still good to go with other parts of it. And by the way, my portfolio is not just like, hey Tommy, you're pretty young, so that's why you can do this. The answer is no. It works for you if you're like 65 and under. You can actually do it beyond 65, honestly, but by that point, I would worry a little bit more about having some bonds in my portfolio because they do fluctuate a lot less, like a lot less, meaning that it's if the market crashes, you still have bonds in there to kind of say, hey, I have this money here that's secure to use in case anything really does go wrong. But enough talking, let me show you exactly what you want to do. First of all, okay guys, you want to download the app called M1 Finance. That's the app I basically use to invest. I have a link down below. When you click it, it shows you exactly what I invest my money into, and you can basically download it right there, invest directly, and also make around like 50 bucks. Not an ad, but it's what I use, and it's also free money, so why not tell you? So now, that's the app I use, and let me show you exactly how it works and how I basically make it work for myself, okay? So right here, guys, is basically, not here, but here. So right here, guys, is my phone. I'm gonna go up, I'm gonna go down. It is my phone, okay? Now, I'm gonna go over to M1 Finance, which again is the app I basically use and I just told you about. Now, remember this, guys, okay? If you make less than $140,000, and that's basically 99% of us here, the answer is you are going to want to go ahead and just use a Roth IRA or just basically invest with a retirement account with your employer. Because when you invest, for example, into a brokerage account, it is taxable. So there is no tax benefit there. The only time you do that is basically if you make a lot of money, you're maxing out everything. If you have extra money, then you put it into, for example, a normal brokerage account. But usually you don't have to. So here's what you want to see, guys, okay? My portfolio is simple. Here it is. And by the way, this goes up, it goes down, but again, you don't care because at the end of the day, this is for the long term. Now, my portfolio has, for example, 1, 2, 3, 4, 5 different investments. VOO, and yes, I'm gonna break down every single one of them because why would I make a video, not break this stuff down? You put money in there forever and you don't know what you're investing into, okay? So by the way, the book that helped me out a lot with this stuff, guys, is called basically The Little Book About Common Sense Investing by John C. Bogle, and don't let the title fool you. It's a great investment book and I highly recommend it. But overall, the first one is called Vanguard S&P 500 ETF, and it's VOO, the ticker symbol. This is basically the 500 largest companies in the US. Yes, I mean Amazon. Yes, I mean Tesla. Yes, I mean Apple. Yes, I mean all those fancy big companies, they're here. Meaning you're investing into all of them, so that way you're diversified and don't have to take all the risks. Just investing, for example, into one company and then it crashing. And then, for example, I also have, for example, VEA, the ticker symbol. And by the way, a ticker symbol is a short abbreviation you can put into the search engine to basically find that investment or security a lot faster. That's all it is, okay? So here I have the Vanguard FTSE Developed Market ETF. Now this means I'm investing into the largest companies outside of the US. So it means that if the US had a bad year this year, but outside the US had a great year, guess what? that's going to balance me off, kind of like a seesaw. So that way I'm not over leveraged, just for example, in the US. And then I have, for example, the Vanguard Small Cap ETF, which is basically smaller companies here in the US. Now, why would you want to invest into that? It is a lot more risky, but why? Because there are a lot of other companies out there, smaller ones that are basically growing. And when a company is smaller, they can basically grow exponentially and you can make a lot more money. But when a company is super large like Microsoft, to even have, for example, an additional 10% or 5% in revenue, those are billions and billions of dollars. It's basically very hard to actually do. So small cap, smaller companies, a lot of growth, but also a lot of risk, okay? Then you have, for example, Vanguard Emerging Markets, okay? Now this right here, VWO, is actually very risky. You're investing into markets that are just basically markets, not markets. You're investing into markets that are just basically growing right now, are very risky, fluctuative in nature, but they have a lot of potential to actually grow. It's like investing into China before it was China. You know what I mean? That's what you're basically doing here. And then lastly, you also have VNQ, which is basically REITs, which is basically real estate investment trust, which basically means you're investing in the real estate sector through the stock market. So guess what? If the market crashes, you still have this real estate sector to actually just hold on, because they don't actually, they don't have anything to do with each other as much. Real estate market is down, doesn't mean necessarily the stock market is actually going to be down. Does that make sense? I hope it does. But not just that, guys. Those are the investments, but they also have, for example, specific allocation. Meaning, hey, when it comes to the US, I want to put around 40%. When it comes to VEA outside the US, I want to put 20%. When it comes to small cap, 20%. When it comes to Vanguard Emerging Markets, 10%. And when it comes to real estate, I want to put 10%. And then all of it together should add up to like around 100%. And the reason I'm so heavy in the US is because basically, the US is awesome and we are going to do great. And that's why I'm investing so heavily in the US, okay? That should answer all of your questions. So if you're wondering, Tommy, well, all right, I got the app. I know what to invest into. How do I open up an account? Simple. You basically just click the three little things there. It actually shows you when you first do it, but it's just about saying, hey, I want to go ahead and basically add an account, and you're actually able to do it. And again, you want to click on retirement account, Roth IRA, because unless you make 140K, you have no business investing, for example, into a brokerage account. And the only reason I have a brokerage account with so much money is because basically I used to go very heavy in the stock market. And these days, I really am not. I'm restricted myself only to 20% at the moment. Now, if you're wondering, Tommy, but what about automation? You're able to do this by clicking, for example, transfers, clicking, for example, move money, and then saying, hey, I want to set up a recurring transfer. And that's really all it is. You're able to actually say, hey, I want to do a recurring transfer. Every time I get paid on Fridays, you're going to grab that money and put it into my investment account. And if you're wondering, what does this look like on a day-to-day basis? It means, hey, you spend 15 to 20 minutes setting this up, maybe 5 minutes, honestly, if you can use my link down below, like 5, 10, 20 minutes, and then you have it set up. And whenever you get paid on Fridays, they grab the money, send it over there, and boom, you're investing automatically into this portfolio. And all you really do is just basically forget about it, because M1 Finance handles really everything. So they have, for example, dynamic rebalance, which basically means, hey, if I want to have 40% here, 20% here, whenever I invest $1, they make sure they invest it correctly, so I keep the same allocation that I actually want. And allocation is just basically how you spread your money around exactly how you want to. That's the idea, guys, okay? And I hope this video actually helped. And if you're wondering, Tommy, well, how has your investment style actually changed so much, Tommy? The answer is it really hasn't. It's the same investment style, but the big difference is, for example, I'm no longer putting all my money in the stock market. So like the other 60%, I'm just holding on to it, for example, in cash to say, hey, I'm going to grab the rest of this money, either invest into real estate or invest into some future projects, or, for example, just save the money for now until I'm ready to make my next move. But one big thing is that the money you put into the stock market, it shouldn't be like all the money, because there's other priorities. For example, before you do this, be debt-free, save for emergencies, then you invest 10-20%. But while you're doing this, you should be trying to pay off your home, because if your home is paid off, you have very low cost of living, which basically means you can actually live off your investments a lot faster. And that's basically what I'm doing right now, guys. Overall, I hope this video helped you. And just to break things down a little further, this year my goal is to, I'll keep investing the same amount of money, I'll save a lot of money, but then I have to decide, what am I gonna do after 5 years? Because in 5 years, I'm probably not gonna stay in Puerto Rico. I might move or I might stay, but I gotta decide on that and have, for example, like an exit strategy for when that comes. Always have an exit strategy and always have numbers in mind. But again, feelings and automation are gonna make this process a lot more simple. You see, 20-minute setup, but then everything else is just basically automated, automated, automated. I'll see you guys next time though. Thanks for watching. Again, the link is down below to M1 Finance if you want to copy exactly my portfolio, word for word, carbon copy. I'll see you guys next time. As always, like, subscribe, hit the bell to get notified, comment down below any questions. Here's more content, and here's my face. On top of that, also follow me on Instagram, TommyBryson, if you want to talk to me one-on-one for free. The link is down below to call me one-on-one. Peace out. Long-term team out.